Yo, what's going on, guys? Welcome back to the channel. In today's video, I'm going to go over the trades that we took today inside the Discord, as well as the game plan going into tomorrow and just how we traded today. So off of open, this is what we looked like. We always look at the 30-minute chart on the Friday contracts. This tells us the trend in the market and what way we want to be playing the 0-day contracts and what trades are the most probable. So this chart right here is very, very ugly. The last week, we just been chopping around a lot, and it was just a time where you want to be sized down. When you see action like this, there's no reason to be really risk on. If you see a cross, a 0-day cross form, take like a one trade and just call it a day at that, because this action is just not good. And you just gotta wait, be patient until we get some trend in the market, or when the market just decides to pick up. So off of open, this is where we opened. So if we look at 9:30, we ended up opening right here. 10 was above the 50 on the call side. So going into today, market was bullish. So what do we look for? 0-day cross on calls, 50 dip on calls. And today we didn't get any place to the upside. So if we pull up the call chart, your entry would have been a 0-day cross on calls, and we never got that. So if we pull up the 0-day chart, you can see here at like 10 to 11, we pulled up in this 50 SMA area, and you see we rejected it, and we never got the cross. So that just means there's no entry to take to the long side. Even though the market is bullish, we never got our long entry, and we ended up dropping today. And we actually caught the drop because if we pull up the 30-minute chart, I saw some people confused at this, but if you pull up the 30-minute chart on the put or on the call side, you could see what happened. So if we pull up 30-minute here, right around this area, you could see we ended up closing below the 50 SMA here. The 10 SMA is pointed down hard, and on this next candle open here at 2 o'clock, you could see we started breaking below the 50 even more, and that ended up pushing us lower, because this chart here pretty much tells us, okay, the bulls are losing the trend. We closed below the 50 once, twice right here, got back above, and it couldn't continue higher, and we closed back below it again. 10 SMA down hard, and the bulls lost the trend, and the puts ended up crossing on the 0-day chart. So that pretty much tells us bulls are going to lose the trend, and we're going to get a move lower, because this chart's going negative, and that's going to push us lower. And all we did was take the 0-day cross on the put side, and we caught a big move. I mean, this was a textbook setup. If you look here, right in here, my chart's messing up, but yeah, right in here, 10 SMA going above the 50, and look at the move we got. I mean, I took a short at 914 on NQ, and I think it dropped like 100 points probably. If we pull up NQ real quick, let me pull up NQ real quick. I know this was a pretty hefty move. So if we go here, I shorted at 914, which was all the way right here. 914 was my fill, and we dropped all the way to 791. So that entire move, obviously I didn't hold that entire move. I sold for like 70 to 80 points. In a neutral market, that is plenty. And the reason I held it a little bit longer was because even though the market's neutral, we're still getting that cross on the 30-minute chart. So pretty much what I mean by that is it's the same thing as like a trending market technically, because we're still getting that 30-minute cross. It's just in the opposite direction. So if we look here, again, this is just the negative cross right here. So 10 going below the 50, it's like the same as the 10 going above the 50, and then the 0-day chart aligns with the trend. This is pretty much the same exact thing, and for me, this is like another high probability setup. It really doesn't get like more probable than this, just because we're, this is in line with the 30-minute chart. 30 minutes going negative, puts are crossing. This is like a textbook setup to take, and that's kind of like what I like to compare it with, because if the 10 is going above the 50, market's bullish, and we get a call cross, that is literally the same exact setup as the 10 going below the 50 and the 0-day chart crossing on the puts, because okay, calls are going negative, that's going to send us lower, and then the puts are also crossing on the 0-day chart. So that just gives you that confirmation, just as it would in a trending market where we get a 0-day cross in the direction of the trend. So this is why it's a really, really high confidence setup. And that's why, we took this today. It was a very, very clean setup. And then we actually ended up bottoming out right at the 50 SMA on the call side, or on the put side. If we pull up the puts, you can see where did we end up bottoming at and rejecting from was this 50 SMA here on the 30-minute. You got to, pull up both sides of the premium. and see where we're at, because that 50 SMA is a very, very strong area of resistance in a neutral market. So if you did continue to hold that short all the way, you would have sold when we started nearing that 50 SMA, because it's a very strong area of resistance, and we could expect a rejection off of this because it has sloped down hard and we are neutral. So if you did hold up until that point, you would have been all out once we start nearing the 50. That is plenty of points. That's over 100 points in NQ if you held that entire move. I sold it all for 70. It's still a really, really good move. And you could have also grabbed some long at that 50, because like I said, you could expect rejection here. We're neutral, and we had a pretty big drop. So if you took a stab at longs, you would have got paid as well. System gave a great entry on the short side, and then also gave the bottom right here at this 50 SMA. So you guys know 50 SMA marks pivots in the market. So once we start getting near that 50 SMA, you could expect some sort of rejection off of it, and that's what happened today. So today, really, really good day. All you had to do is just wait, because market chopped all day. If you pull up the 0-day chart, we chopped pretty much all day. We were moving a little bit, but there's no sense of direction. So you could see on this chart, there was no cross until that massive move down. So you can see the puts ended up crossing here. We did break above the 50 here, but we never crossed. We finally got the cross right there. Got a big move, and then if you pull up the call side, there was no opportunity on here as well. In hindsight, you could say, oh, why didn't you just short this? Because market was bullish at the time. We're just looking for that chart to go cross. It never crossed, so there's no trade to take. Best trades are always the crosses. Playing the 50 rejects aren't the most probable setup. You could try them. Obviously, on this type of chart right here, I wouldn't try them, because we know the market's bullish. You don't take these rejects on the 0-day chart in a bullish market. So you're just asking to get ran through, because why would you play a reject of the 50 on the 0-day chart when the market's bullish? It just doesn't make sense. If anything, you do it to the put side, which actually ended up working, I think, earlier in the day, maybe. Right, where did we hit the 50? I'm trying to see. Yeah, we ended up hitting the 50 right here at 12. It probably provided some points on the initial wick, but those trades aren't the best. It's always best just to play the crosses. The rejects aren't really something that I would take. If it's just not a high confidence setup. But yeah, that's what we did today. Going into tomorrow, what do we look like? It's pretty simple. When we pull up the 30-minute chart, what do we see? So on the put side, we're sitting right around the 50 SMA, which is a key pivot. This 50 SMA is sloped down a bit, so until we get a cross going and break above, market's neutral. You can pull up the call side as well. Same thing, 10's below the 50. This chart's going negative. That means we're neutral. There's no trend in the market. If we look at the higher time frames, I don't even know what we look like. 10's going below the 50 on the 1 hour. Same thing with the 2 hour, and the 4 hour actually rejected the 50 SMA as well. So that's probably going to end up curling down. We might possibly see a big drop. I don't know. We have to see the 30-minute chart on the puts cross for me to have a strong bear bias. But until then, market's neutral. So what do we look for? 0-day cross either side of the premium. If we flip bearish tomorrow, if this chart, if we gap down tomorrow and we cross, focus will be on the downside. So we look for that 0-day cross on puts, 50 dip on puts. It's a pretty simple game plan. That's the great thing with the system. There's always two scenarios when it comes to looking at these charts, because if we break lower, okay, we know what to focus on. That's the downside, and play the 0-day chart on the puts. If we're neutral, cross either side. Most likely, if we do stay neutral, then it would be a call cross, because this would end up rejecting the 50 and see a move higher. But we're just gonna play what we see tomorrow. That's exactly what we did today, because going into today, we were bullish, but we never got the entry to go long, and then we ended up taking a play to the downside because the market ended up changing. We saw it move to the downside. 30-minute went negative, and we caught the move on the put side. So yeah, pretty simple day, pretty simple game plan. And yeah, that's all I got. If you guys enjoyed, drop a sub. If you guys want to learn, join Discord down below. That's where all the trades are shared, all the knowledge is shared on the system. And yeah, place to be if you want to learn. But that's all I got. I'm out. Peace.